Most people believe that banks only lend out money that has been deposited by other customers. We imagine a vault full of gold or cash waiting to be handed out. But the reality is far more surprising. Banks don't just move money, they actually create it out of thin air.
To understand this, we must distinguish between central banks and commercial banks. While the central bank prints physical notes, they only account for about 3% of the money in circulation. The remaining 97% is digital money created by commercial banks through the act of lending.
This process is known as fractional reserve banking. When you deposit $1,000, the bank doesn't keep it all. Regulation requires them to keep only a small fraction, say 10%, as a reserve. The rest, they are free to use it to generate profit.
Here is the magic trick. When the bank lends $900 to a borrower, they don't take it from someone else's account. They simply type the numbers into the borrower's account. At that moment, new money is created. The original $1,000 still exists in your account, and now $900 new dollars exist in theirs.
This creates a multiplier effect. That $900 will likely be spent and then deposited into another bank. That second bank keeps 10%, which is $90, and lends out $810. This cycle continues until the initial $1,000 has expanded the money supply significantly. But money isn't just created, it can also be destroyed. When a borrower pays back the principal of their loan, that money effectively disappears from the bank's balance sheet. The interest, however, is kept by the bank as profit. This is why the global economy is so dependent on constant borrowing. Why don't banks create infinite money? They are limited by three things: central bank interest rates, which make borrowing more or less attractive, government regulations on capital requirements, and the bank's own need to remain profitable and avoid risky loans that won't be paid back. In the modern world, money is debt. Without loans, there would be very little money in circulation. Understanding this system is crucial to understanding inflation, house prices, and the global financial cycles that govern our lives. The power to create money is the ultimate tool of the modern age.